Welcome to the latest Motley Fool Scoreboard. I'm on in Chocolate. We've got longtime fools Jason Hall and Lou Whiteman giving a 1 to 10 rating to a retailer I'm curious about due to its seemingly massive advertising onslaught with the likes of celebrity endorsers Sweeney and Travis Kelce, and among others. It was my favorite clothes place as a teen. It's American Eagle Outfitters, ticker symbol AEO. We'll rate the strength of the business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Not looking so good. Jason, you're at a 5, and Lou, you're at a 4.
First off, let's put the rumors to rest. I didn't turn down that ad campaign before they gave it to Sweeney. I know a lot of people thought that, but no, that was all her. Just a terrible rumor. Look, American Eagle is a clothes retailer. They operate in a part of the market where if what they are selling is hot, it works. And when it's not hot, it really, really doesn't work. I know you mentioned competition is something here. Competition is everywhere. They did get a short-term boost from Sweeney and Kelce, but you're always chasing that next sugar high with this business. It's a terrible business for me as an investor to have to count on that sugar high, so I don't want any part of it.
Peter Lynch told us even the best business in a mediocre industry is a mediocre business, and it's a real challenge where they operate. So my 5, I could have gone lower. I don't really have much to add to what Lou said, except for 3 words on it. These better resonate with you. Corduroy painter's pants.
Ooh, that does resonate.
There you go.
For management, a 10 is Warren Buffett. A 1 is Homer Simpson. Jason and Lou both have a 7.
Jason, you just mentioning that, I just got an electric shock touching the chair in the library the second you said that. So thank you for that. Yeah, I'm at a 7 here. And Jay Schottenstein and his dad created this company. He ran it from 92 to 02 and then came back in 2014. Second in command, Jen Foyle, has been there since 2010. So they know what they're doing. They have survived a long time, which is not just a given in this industry. And look, they took a big swing with that ad campaign. This is a business where big swings are required. I'm not going to fault them for that. I think investors need to encourage that. So a pretty positive. I still don't like the company, still don't like the business, but I think they're the right people to run it.
Yeah, no, I think that's right. And if you look at Schottenstein as a good example of like the part 1, part 2 of the business, from 94 when the company went public until he left the CEO the first time, 21% annualized returns. There were so many tailwinds in favor, though. Malls were hot. This was a growth brand. They were adding stores. So a lot was going on well. But his second act hasn't gone well. Since taking over in 2014, revenue's up less than 60% total. Operating cash flow is up 78%, so that's good. But again, we're talking over a decade, and the company's revenue's up, 4% a year? You can't. We're going to see more of the same. That's just the reality.
Jason, I see your cords, and I raise you some Bugle Boy cargo pants. For
now
financials, a 10 is a fortress, a 1 is yikes. Both of you have 5s, Lou.
Yes, I'm not at a yikes, but I'm not too much better than that. We should say, though, the most recent quarter was amazing. Massive beat, EPS nearly double expectations. That's the sugar high I'm talking about. The question, obviously, is sustainability, and I do have questions. $2 billion in debt on just $126 million in cash on the balance sheet. That's getting towards the yikes for me. You do get a 3% dividend yield, so I'm not going to totally be dismissive here. Again, they've been around long enough that I think the machine can continue, but not a lot to get excited about.
Yeah, I think there's a little bit of the cycle timing too as we're getting towards inventory build for the holidays, which is a busier time for apparel brands. But that dividend, you could say that's compelling, but it's one of the first things that goes if business is not going well. So you don't buy this as an income stock. It's not a cheap stock right now. Again, mediocre results. You look at it, and it's okay for its industry, but it's not the sort of business, unless I was getting a super deep discount, that I would be happy with these financials.
Jason, let's talk valuation. How well will American Eagle Outfitters stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
So under part 2 for the once and former and once again CEO, investors have gotten less than 3% a year in annualized returns since coming back and taking over the business. You look at those deteriorating financials. We talked about the balance sheet that's not real pretty to look at. Why would I count on anything better than roughly that same 3% a year that investors have earned since he took over? So 0 to 5, the balance sheet concerns me. Safety score of 4. There's a lot of of potential to see things get really ugly really fast, and shareholders be the ones to take a bath as debt holders start calling in the accounts if things do get kind of shaky. So I don't like this one as a safe investment or one that can even come close to beating the market.
Yeah, I definitely agree with that. I'm going to give them the benefit of the doubt. If they've been around so long, they'll find a way. So that pushed me up to kind of the low end of a 5 to 10%. If things go well, it might be a market performer, but I'm not really excited about it. Safety, I'm at a 4. I don't think they did. I mean, they've been around long enough. I think they'll figure out a way, but that's not exactly an encouragement to go buy the stock.
Yeah, I agree. I think it stays a public company, but I think there's just such a high probability investors don't make money over 5 years. That's why I've dropped below that 5.
Thank you to both Jason and to Lou. They've given American Eagle Outfitters a woeful overall score of 4.9 out of 10. If you're curious, it gets a 59 for its Moneyball Super Score. For Toppets, Lou prefers Nike, and Jason prefers Lululemon, which we recently did a scoreboard on just the other day. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is something good, I promise. Till then, full on.
I hate to say this, Jason's actually right. I'm the last person in the world that should be opining on fashion trends. So